Agents, this is Luis Moreno with Insurance Agent Training. We're going to be talking about short-term medical and how it plays out in the world of healthcare. All right, so before I share the big news on what's happening with ACA, what's happening with short-term medical, because this is changing day by day, I want you guys to like this video, comment down below, and if you would, please subscribe to the channel. Channel's growing, but I do need your help if you're not a subscriber. All right, so what's the latest news with ACA? Check this out. This might be backwards. Hopefully you can still read. Okay, business news. Insurers are seeking premium hikes. And we're talking about health insurance insurers, health carriers. Okay, another article just came into my paper that I still like to read. I'm still a little old school. ACA premiums expected to skyrocket. Okay, so this is what clients are reading right now. And we already know that we're going to experience in 2026 some big increases, 20, 30, 40% increases. So I'm going to explain what's happening. So number one, under the Biden administration, these past years, including 2025, our insureds have enjoyed the benefit of the enhanced subsidies. So what this means is that insureds got more money, which means a lot more people had a $0 premium. Secondly, is insurers making more money beyond the 400% of the federal poverty level. Even those people got assistance for their health plans. Now, welcome to the new administration and changes that we're going to be dealing with going forward in 2026. This is the OEP that we're going to deal with starting November the 1st. The enhanced subsidies are going away. In fact, they're gone. Okay. Subsidies are still here, but the standard subsidies are here. So what does that mean? So two things are going to happen. Number one, insurers are raising their rates. So rates are going up. Standard subsidies means instead of getting the enhanced higher subsidy, they're going to get a lower subsidy. That spread means higher premiums for our insurers. Okay, it's just the way it is. You know, the industry talk right now is 30, 40% of people are gone. They're going to say, hell no, I ain't paying those new premiums. There's just no way. It means we're going to keep 60%, maybe 70% of our book. So if you're making $100,000 off ACA, not next year you won't. Okay, unless you become the master of cross-selling, in my opinion. All right, but let's talk about today's topic in this training. All right, so the alternative. What are going to be some of the alternatives out there? Well, let's run a quote first. Let's jump into that. All right, so I'm in Health Sherpa, and I'm running a quote for a female born January 1, 1990. And I'm assuming her income is $100,000. Okay, so I'm running this, and I'm going to go straight to a gold plan. Okay, and let's say on the gold plan for her, I'm at $400, $399 and change, with a maximum out of pocket of $7,500, $7,600. Okay. We all know that next year she is not going to be paying $399 with these rate increases. Let's say that it goes up to $500. Okay, and I'm guessing because we won't know rates until a few days before open enrollment. Okay, so it goes up. Now what? Okay, so they come to you, and if you don't have a solution, either one of two things are going to happen. Number one, they're going to say, I don't have a choice. I have to keep this. It is what it is. And that's not going to be a good conversation. Or number two, it's going to be even a worse conversation. They're going to tell you, hey, I'm not going to pay this. I'm done. I'm out. You need to fire right back with saying, hey, hold on, slow your roll. I've got a solution for you. All right. The solution is going to be short-term medical. Okay. So you're going to be able to run some short-term medical quotes for them. Okay. We're going to talk about the pros and the cons. But United Health One, which is the one that I use mostly because they're very, very competitive. And then I'm going to get into some more details here. Okay, so I ran a value plan, an elite plan, and a co-pay plan. Well, look at the premiums. Remember, $7,600 out of pocket, maybe a $500 premium. Look at my premiums right now for this. Okay. Now, in the world of short term, there is in the ACA world, the deductible is built into the out of pocket. In the short term world, it is not. So to come up with a true out of pocket, you have to add the deductible plus the out of pocket that they say that they have. Now, I use the Elite because it's 100%, which means after the deductible, there is no more money to be spent by the insured. So you choose your deductible. I chose $7,500 to match my gold plan, and I'm at $274. Might be a really good option for this person if they qualify. Now, I could look at the value plan, which has a better premium, but I'm taking my $7,500 plus $10,000. I just increase this person's exposure to $17,000. And then I can go over here on this copay plan, which I never do, and $7,500 plus 5, I'm at $12,000. Premium's not too good. I stick to the Elites a lot. Now, a couple of things about these plans. So let's get into the availability, then we'll get into the pros and the cons. So getting back into the availability here. So let's go, I'm going to share with you this map that I have. So short-term medical pretty much is available everywhere. The issue with short-term medical is the term limits for every state. So there's been a relaxation of the rule. The rule that came out a couple of years ago was you could only do a 4-month plan, a 3 plus 1. So you have a total of 4 months. So what we've been doing in the past is we would offer a 4-month plan with this carrier, another 4-month plan with this carrier, and another 4-month plan with that carrier. 3 different carriers within a 12-month period. Okay. Now the rules have relaxed. I got an email from our Allstate rep that said Texas is getting the year back. Instead of 4 months with 3 different carriers, we can do 4 months, 4 months, 4 months, 3 terms of 4-month terms each with the same carrier. That's going to be really good. So you approve them, and you get all 4 of them in there, all 4 months times 3, which is the whole year. Only problem with doing 4, 4, and 4 is that every time you get a new 4, the deductible and the out-of-pocket reset. But regardless of what's happened to them here, they're still approved for this tri-term or the second one and the third term. Okay. All right, let's get into the map. All right, here's the map, guys. So you are seeing the map, and it's color-coded by the dates on the availability of the terms. So you will see here that these dark blue ones right here, let me make this a little bit bigger without losing the screen. Okay, let's go a little bit bigger. So you will see here that up to 36 months in the blue states. So you can do 3 annual terms, 3 12-month terms for those in the blue states. In the one with the little lines like this would be like South Carolina, one state. You can do 33 months. This you can do 24 months. And I'm in Texas. Man, I am stuck with 4 months. Okay, so 4 months here with this carrier, 4 months with that carrier, 4 months with that carrier. Well, I got an email a couple of days ago stating that Texas brought back the 12 months. So now I can do 4, 4, and 4 all with the same carrier. So that's good news, at least for us here in Texas. All right, let's get into the pros and the cons of short-term medical. Okay, so a couple of things. Let's go back to this presentation because it is a pretty good presentation. All right, take a look here. All right, so who can enroll at least with this carrier 60 days, 60-day-old baby, all the way up to 64 years and 10 months. Okay, after 65, they got to get on a Medicare. All right, children through age 25, but the parent has to be on there. And then you can do child only apps 60 days up to age 18. That's with Allstate. With each carrier, you're going to have different rules. All right, now let's get into some eligibility requirements. Now, I'm giving you the Allstate requirements, but every carrier is going to have their requirements, and they're pretty similar. If you're a male, 300 pounds. If you're a female, 250. Okay. And then they're all going to have questions. Okay. So in this scenario, all right, let's make this a little smaller. Okay. If they're pregnant, no dice. If they're expectant parent, the dad, no dice. If they're in the process of adopting, no go. If they're going to have a surrogate pregnancy or undergoing infertility treatment, no go. In the past 5 years, have they received any medical treatment for the following? Not going to happen. If they have AIDS or HIV. In the past 12 months, have they been recommended or scheduled for testing, treatment, follow-up, or surgery that hasn't been completed? Consulted a healthcare professional for signs or symptoms of a medical condition for which they don't have a diagnosis to. Okay. If the last 5 years, within the last 5 years, if they had a medical or surgical treatment, consulted a healthcare professional, or had prescribed medication for any of these conditions, they're not going to go through. Okay. So you got to be aware, guys, that with healthcare, with with short-term medical, there are underwriting questions. So the insurers are going to have to qualify. Okay. So the premium may be right, but they may not be able to qualify. So one of the things that I recommend for you guys when you're talking to them, before you go waste your time and run quotes and get their hopes up on a better premium option, is find out what's going on with them medically. Hey, do you have any health conditions, Mr. Insured? No, I don't. I'm great. Are you taking any medications? Yeah, I take medications for this. Okay. Then you know, hey, you may or may not be able to give them an option. Okay. All right. So now you know the availability of these short-term plans and what terms are available. Second thing is pre-existing conditions aren't covered. Now, I will share this email with you. Okay, let's look at this email. I got this from United Healthcare a couple of days ago. All right, here we go. So, oh, that's not the email. Give me 1 minute here. Let me find the correct email. Oh, here we go. All right, this is the one I wanted to share. Okay, I got this email. I got it yesterday, September the 22nd. Tri-terms are back. Okay. So today is the day. Tri-term medicals are back in select markets. So they're not everywhere. So tri-term medical, so 3 years of coverage if you are in any of these states. So pretty cool. Okay. Here are why some clients and brokers, of course us, are excited about tri-term medicals. Why? Up to $2 million worth of coverage. Pretty good. Okay, coverage for pre-existing, but after they've been on a plan for 12 months. Okay, you've got some copays here for doctor visits. Okay, we know we got the $50 copay for urgent cares built in. You got a little prescription drug coverage. And then the really good thing I like about UHC is they use their choice PPO network. Allstate uses the Aetna network. Now, as of September the 19th, here are what we have as far as availability. So in these states, you've got 12-month plans. In these states, 6 months. In Mississippi, 12 months plus 1 day. I guess, or I'm sorry, 12 months minus 1 day. 6 months here. So there are the dates on this. All right. So let's get into just a recap of the pros and cons. The biggest pro on short-term medical is this: premium. Probably going to be less. Now, it's going to be less for your high-income earners who don't get any subsidies. All right. Let's look at this. We go into this very same person, and let's say that this person is making 35,000. At this point, there's no way to compete with a short-term medical. Okay, you can't compete with price when they're getting some subsidies. Now it's going to vary. Let's just say I put her at 50,000. Okay, she's still at $214 for a 7,500 max out of pocket. If I get in here and I start, just close that window. Hold on here. And we do this elite plan at a 7,500 max out of pocket, I'm still at 274. How can I compete? Okay, how can I compete with a $214 plan, which is making 50,000? There's really no reason to do that. So, something to think about there. The negatives on this one: number one, you got to be aware that when you do these terms, that every time one term ends and another one starts, everything resets. So be aware of that. Second thing, pre-existing conditions. Okay, they're not going to cover them. In some scenarios, you got to be covered for 12 months before they'll entertain covering a pre-existing condition. So be aware of that. Copays. Okay, there's another negative. Be aware of the copays. Okay, these plans have urgent care copays. They may have some doctor copays. They may have some copays for some prescriptions. So be aware of those limitations. It's, in my opinion, guys, it's ACA or bust when it comes to somebody who has a pre-existing condition. Okay, it's my opinion, all right? All right. Now, if they're healthy with a high income, short-term medical is definitely an option. Finally, where it's not an option is if they're getting subsidies. The ACA is still going to be the best way to go. But where can a short-term medical kind of come into play? I would say that a short-term medical is going to come into play when those rates are too high and they're just not going to take it. Secondly, what is going to happen when they miss the enrollment period? And we know we're going to deal with those insureds that miss the enrollment period. What is going to happen? Well, what's going to happen is they're not going to be able to enroll into an ACA plan. So you're going to have no choice but to put them into a short term, and hopefully they qualify. Otherwise, there's nothing for them. The rules for special elections have changed completely from the old administration to the new administration. So be aware of that. We don't have the low income SEP and the other SEPs that we can utilize. We have to provide the proof before the enrollment goes in. So what's happening is these enrollments are being blocked until you submit the correct proof and somebody approves it, then they let the application go through. It's not like the good old days, all right? So if somebody has missed their coverage or missed their enrollment period, maybe they're in between jobs. They're working here, they move to this job, but there's a 60-day wait or a 90-day wait before they get their coverage. A short-term medical is a great gap for you to come in there and fill out. So, guys, short-term medicals are an option. If you don't have these three carriers, get a hold of me. Shoot me an email. Carrier number 1, UH1. It's not the standard United Healthcare ACA contract, nor is it the standard Medicare UHC contract. It's a completely different contract. If you don't have them, let me know. Now, short-term medical is one of the products that you will get in that suite of products that they offer. They have indemnity plans, they have dental and vision, they have some doctor copay plans that you can use, like the virtual visits. They got a suite of products. Allstate has the very same thing too. Okay, so with the Allstate contract, if you don't have them, Allstate Health Solutions, let me know. And then the third carrier, my third choice in the short-term arena, is Pivot Health. They have really good, inexpensive plans for kids, college kids. I use that a lot for them. So if you don't have any of those three carriers, send me an email, luis@insuranceagenttraining.net. And what I will do is I'll send you contracting for them. You get set up and you're ready to rock and roll. Guys, don't wait till the last minute. Get it done now. What's going to happen is you wait to the last minute. It's going to take some time before those contracts come in, and you might as well have them now so that you can prepare and you can practice quoting and you're ready to go. All right. Guys, don't forget, comment, like, and subscribe. And don't forget down below, my email's down below. I also will have links to my products there. One of my enjoyable time is I do sell my time, guys. I am super busy. I'm running an agency here with 14 employees. I've been in business for 25 years. 14 employees, about 10,000 plus insureds. My time is very, very limited. The one part of my job that I'm really liking is helping agents. So if you want to talk on a one-on-one, like a coaching call, I got a half hour and a 1 hour book of time that you can do. Let's have a conversation, guys. Okay? Whatever you want to talk about, staffing, agency growth, specifics on ACA, Medicare. Okay, I've been doing this for a long time. I will share everything that I have with you. So if you're interested, come hit me up there. I also got my ACA and my Medicare Smart Books. One-time purchase, and I update them every year. You have access to that. And finally, if you don't have a CRM, guys, you got to have a CRM. It's like a carpenter needs a hammer, a painter needs a brush. Okay, it's one of those essential tools that you must have. I use Agent CRM, and you get all of my workflows. So I have that down below. Give mine a try, 2-week trial. You don't have to pay anything, and you will get access to all the workflows, the automations that I have created for ACA, Medicare, life, dental, and also for P&C products like auto, home, and commercial. You have access to all of that. So, and then the last thing I can think of is I have partnered up with Shauna from Click to Close. She's got a course where she will teach you how to run ads on social media. So I've got a lot of agents that ask Luis, how do you write over 1,000 ACA policies during the enrollment season? I advertise on social media. I run ads. I don't know what the heck I'm doing. I followed her course years ago, and I got it running on autopilot. So if you want to learn how to run ads on Facebook and Instagram, get her course, guys. Click on her course, and you will have she will teach you step by step on what you need to do. Guys, this is Luis Moreno, Insurance Agent Training. Don't forget to comment, like, and subscribe. Thank you.